Wells only and his guests are not responsible for any losses you may accrue for having weak hands. Where the haters at? Y'all bitches still ain't showed up. And now, right, we got Hex, flawless uptime. People thought this was a joke. Now they're mad at the chart. It's lullaby music, really, right? It's hard to believe that something like this exists. I get it, but you just gotta come to terms with reality. It just exists. Nothing we can do about it. Buy a steak and chill, baby. Shout out to Marketable Thoughts. You can't get this kind of shit for free anywhere else. And it's very important to understand that. And we're handing it out. People thought this was a joke. Now they're mad at the chart. So much luck, once again, because the facts don't give a fuck. Peace. What's good, fam? A happy Friday. It is Friday. And market got smoked today. It's already 3:30, so session's pretty much over. Everybody now is just adjusting for whatever's happened based on the day for next week, next month, etc. So yeah, it was a hell of a day. Let's start with the charts, and then we'll do the news. We'll do a little backwards today. Hope everybody is having a good one. I know I am. I just keep cracking codes, man, and I'm not mad at that. I'm not mad at that at all, because all that does is give me more plays for the playbook, and that's what we need. That's what we need. All right, here we go. And let's make sure I also have my system audio on. All right. So this is today. All that yellow means it was a lot of selling going on, because that's a direction that the market took, basically, for the day. Give me 1 second. I gotta see these things on the screen. Otherwise, it's like, why do I come up with them? All right. So yeah, market got smoked. Dollar got bought up. So that's typically a sign of risk off, and what that means is that the market is choosing to seek safety versus trying to take on risk. That's basically what it means. That's why people say risk on, risk off. So, long story short, the market was dumping into the most recent established low, which was from 27th of August. And when we zoom into the hourly chart, we'll see that this morning's data is essentially let's get a little more granular here. Hold on, guys. There we go. So can you guys see? Let me get rid of these moving averages, because this is a good one. If you note 259, right? 259 in the morning, 332 in the morning, 453 right here. We're at 7:25 a.m. And right here Let's see. This is 8:08 a.m. This is 8:30. This red candle right here is 8. Oh, I'm sorry. It's 8:26 a.m. The next candle, which is a green one, is 8:30 on the spot. And price goes from 100 spot 8 2 half up to 101 spot 18. And that's within the same second. So that happens when there is essentially no orders within a price range. That's the only way that can happen. It's not anything else. So it's like that's how the market skips orders, so to speak. But it's not really skipping orders, is that there's no orders there. So that's a 37 basis point move, which is huge in the currency market. And that's really the main thing I wanted to point out. So anybody that was playing this the opposite way got smoked because that's a big move. And this is just the first move, right? It kept going after that. And guess what? That was 2 seconds after the data got released. So this is the difference between a human and an algo or a trading bot. That's 0.5% in 2 seconds. Literally. I mean, this is what killed a lot of humans out of the trading game back in the day. And by back in the day, I mean like 10 years ago, 15 years ago, because a lot of people traded off economic data and it was a slower trade. It wasn't a bunch of robots. But with time, this became the issue. And if you didn't know how to play that, you pretty much had to retire. So that's what a lot of guys ended up having to do. That they ended up having to get out of the game. Anyway, we go there to there. That is 2 minutes after the bell, a complete reversal of almost 1%. So the market traded 1.3% within 2 minutes of data release. And after this, basically, Stone Cold Stunner that the market did on whoever wasn't ready for it, right? Because that's basically what it boils down to. If you weren't already short, or you didn't already have orders down here or something like that, you got smoked, man. Because that's the way the cookie crumbles. So let me zoom out just a tad bit more. All right, there we go. So that's 2 minutes of price action right there. And that's a pretty big range. You look at how long it took the market to retrace that. I guarantee you it wasn't 2 minutes. Yeah, a whole hour and 8 minutes after that. That's 8:31. And the peak candle here is like 9:58, 9:38, I think. Hold on. Yep, 9:38. So that's a whole hour, 7 minutes to retrace this move that it did in 2 minutes. This is why sometimes you got to know what you're good at. Because, boy, I know a lot of people were probably trying to play this in FX pairs somewhere. And probably just didn't work out for them. Let's see. Looking at the Aussie dollar right now. And we're just going to look at it from today is the 6th, 8:30 to right after that. Let's see here. So here's an example. So 8:26, market is trading 6.7 through 6.730 basically. 4 minutes later, 8:30, seven, basically around the same price, maybe slightly lower by a tick or two. So if you were short, right, and you got short like right here, the market went against you a whole 40 ticks before you actually got back in the green again. And here's the thing, this is what I was complaining about last week with the ranges in the currencies. If we are about to enter a macro world whereby these currencies are going to start doing their own thing because the dollar is no longer going to be the pivot point, what that means is that we're going to start getting ranges back in the market. And this is an example of what I was complaining about not existing before. This is 100 pip or 100 tick day in the Aussie dollar. I mean, there hasn't been one of those in a long time. And I mean, just look at the chart, right? This is in one day. This is going back to many days. Let's see here. How many days we're looking back? Yeah, at least a month and a half. And you just don't see this range in a tradable fashion in a lot of days in one day, right? You might see them over a week, like you're seeing here. But that's not what we want. We want 100 handled days. So if you were able to be patient and whatnot on this morning's Australian dollar trade, yeah, yeah, you could have made a nice penny. Oh man! All right. So that's pretty much the big story, and it was so bad that, let's see. Yep, it even got the gold. It even got gold on bended knee, so to speak. As the market traded down today. And today, like yesterday, was a big economic data release day. And today, let me see what we had. We had a whole bunch of employment, unemployment, PMIs. Here we go. Average hourly earnings, average weekly earnings, government payrolls, manufacturing payrolls, non-farm payrolls, participation rate. So we had all this employment related um, data get released today. And that economic data, specifically the labor market data, is very front and center, very front of mind with respect to the market right now because people are keeping a close eye on the fact that the U.S. economy is two-thirds consumer and people aren't consuming because they can't afford to. So people are really paying attention to what's going to happen with the consumer from top to bottom, honestly. Because if you're an individual that's not surviving because you have no job, I mean, this number here, participation rate, the civilian labor force participation rate is the number of employed and unemployed but looking for a job as a percentage of the population 16 years and older. So, long story short, if you're considered to not be looking for a job, you're not included in the participation rate and therefore not included in any of the unemployment rates. So, what is reported is actually false. And that's important to understand. I mean, it's probably, I don't know, probably 150 million working age adults. I guarantee you they probably track half of that. And that's being generous. I can't remember the number from whenever I looked it up, but I'd have to look it up and see what the N actually is. And by N, I mean like how many people are they actually capturing in this number? Because if I start going to dig now, I'm not gonna stop. So I just really can't get into this right now. Uh, yeah, don't give a dog a bone. So let's keep moving. Um, so, anyways, long story short, The market is focused on this. The Fed is focused on this. The market understands that the Fed is focused on this for the reasons that we talked about numerous times. Come on, man. Hold on, guys. Let me just. There we go. Fed funds rate, 2-year spread. Where are we? Oof. Wow. Uh yeah, this is getting crazy. So what's interesting is that we have certain parts of the curve that are becoming uninverted, um, which means we're entering a recession. Period. Not debatable. So in line with that, you're seeing that the Fed funds versus the 2-year is now what, 7 cuts behind? Because as I've explained before, every cut is considered 25 basis points. So if the market is saying around 1.75, which is the low for on today, today is the day it made that low. Um, let's see when. Haha. Right after that data release. So the market's talking. And by the market, I mean the 2-year. Because the Fed funds ain't fucking moving. And the Fed is going to have to do something about it. And here's the thing, my best guess as far as what's going to happen, and I think the Fed meets again next week. Let's see here. Oh, sorry. I don't. Yeah, I think we can go to next week. Yeah, let's go to Wednesdays. It's usually Wednesdays or not. Nope. All right, I don't know when the Federal Reserve is meeting, but I'm pretty sure. Oh, it's the week after. It's the week after. Yeah, yeah, yeah. It's the week after. Let's see here. Yep, Federal Reserve interest rate decision. I'm not gonna share personal. It's funny because something personal happens this week during this week, and this is why I remembered. No, it's not next week. It's the week after. So, anyways, uh, yeah, yeah. Um, next 2 Wednesdays from this Wednesday is the next interest rate cut meeting, and here's the thing. When you look at the market, honestly, in my opinion, the only saving grace, and by saving grace, I mean the only thing that could probably stop the Fed from feeling like they have to do an emergency rate cut, because 2 weeks is a long time. Imagine the interest rate just keeps going down. Right? Let's play out a scenario right now. Right? Let's do a little what do they call that? Scenario play. Uh, let's do a little role playing. Right now, I'm throwing up 5 days per candle. All right, so we can see clearly that the trend for the 2-year yield is down. You have oscillator straight down, volatility straight down. So, i.e., bullish. Now, the last thing is that it really has to break this 3.5 level. And in line with that, excuse me, it has to break that 3 level because it flew up to 3.5 from 3. So it has to pancake it if it's gonna actually do it. And thank you, Paul Sachs. This is actually a great comment. And shout out to everybody in the chat. I'm not ignoring y'all. I'm just trying to get through this before I get tied up and rambling on. Um, I don't know if you guys are aware, but moon cycles matter to the market, believe it or not. Uh, yeah, that's all I can pretty much say out of that. Um, so yeah, if the market, and by market I mean the Fed funds, is already saying red, flashing red. This is what that is. It's flashing red. Look at the 2 years flashing red, 5 year, same, 10 year, same, 20 year, same, 30 years gonna be the same. So everything is following the 2 year. And let's make sure. Yep. I mean, in all honesty, everything is following the 1 year. And odds are it's probably everything following oh, nope. The 1 year is leading the rest of the curve. Once we're talking about yearly. But interestingly enough, when you look at the monthly yields, and never mind that 4 months, nobody really looks at that. The 90-day yield, it's already below the most recent local low and encroaching on support. So we're gonna really find out here soon, as DMX would say, was really good. Because if you look at the 6 month, same position. So the 1 year is pretty much in line with. Let me see the 1 month again. 1 month looks like the long end, interestingly enough. So the 3 month, the 6 month, and the 1 year are all on their support lines, while everything else is kind of right above it. Yeah, kind of like right above it, just like the 2 year. So let's see, it's 10 versus 2. Here we go. So this is the portion of the yield curve that has everybody losing their shit right now. Um, excuse me, guys. And the curve inverted all the way 1%, minus 1%, and it's above zero, just getting above zero. Let's mark that on the chart. Let's do it with a horizontal line. Let's get rid of the magnet here because we don't really need that. Nice, perfect. All right. So that's zero. So we're just creeping above zero right now. And I think it started last week, if I'm not mistaken. Yep. And August 5th. How about that? And the 4th of September. So a couple of days ago. So when we actually closed. Oh no, it was still negative. Today's the day. Ouch. Well, apparently nailed the timing of this inversion because I really hadn't realized it hadn't inverted yet. I thought it had. Guess I was just living in the future there a little bit. Well, people were expecting it, and it had encroached on inversion on the 5th of August, and today is the day where we actually inverted. And in line with that, you have the VIX essentially just trying to find some momentum, it seems. I'm not sure that there's going to be follow through because the VIX is looking a little. But the thing about that is that when the VIX looks like that is when it kind of does its thing. So that's why you just can't speak in these absolute terms. The last time that the VIX looked weak into a close on a Friday, we gapped down. And that was the 5th of August. Um, let me see. Here we go. It wasn't even the 5th of August. It was before then. But I remember looking at it and thinking, meh. Hell, matter of fact, I definitely streamed right before then. Because I was talking about the VIX and we were talking, like, I made the VIX like a focal thing during that stream. And the next thing you knew, bloom, thing blew up. So, we're in a higher volatility environment. That was the narrative at the time. It continues to be the narrative today. And this yield curve inversionary scenario that's playing out right now in the 10 2 year is not helping. So let's look at what's happening in some of these other yield spreads. And let's see. I'm going to start with the nope, not 1 year. Actually, yeah, let's look at this. 1 year, 1 month. It looks just like, so now we're looking at the 1 year yield minus the 1 month yield. And interestingly enough, it looks just like, just like the federal funds 2 year spread. Not a coincidence. 1 year, 3 month, same deal. And look at how inverted it's getting. I mean, that's crazy. Let's see what we got here on the timeline. As far as data goes, mm, 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 mm. Oh, wow. Okay. Oh, this goes back to 1960. Damn, too. How about that? All right. Well, we're not in record territory just yet. We'd have to go back to 1980 and 81 for that. And that was basically the top of interest rates. So there you go. Not sure it's going to play out the same way on this side, but interesting to note. Interesting to note. 1 month or 1 year, 6 month spread. Let's go to that back down to 5 days. Again, just getting smoked. And the interesting thing is that we got two pieces of the market kind of going in opposite directions now. Because now we have everything greater than 2 years inverting. Well, I mean, all the spreads that are comprised of time frames greater than 2 years or more. Because if you look at the 10 year, 2 year, the 10 year minus 2 year yield, that one is in positive territory. 10 minus 5 also in positive territory. Now let's drop a zero line in here again. And the main one is the 10 year minus 2 year spread for whatever reason. I couldn't tell you. That's just the one the market focuses on. I guess because it's the longest after 1 year, and that's pretty much it. I really can't think of any other reason why they would pick that. But anyways, the 10 year minus 5 year has been positively inverted. It's been, was the last time it hit positive territory after going negative. Well, this one is easy. This is probably why people don't focus on it at all. It doesn't really give a clear signal. However, if you look at the structure of the chart, it's pretty clear that this is it because of the shoulder or this bottom, this local low you're looking at here. Um, Odds of the market returning and breaking zero now are very little because the structure is such that we should see something like that. It's just continuing momentum to the upside based on the fundamental factors that we're seeing in the market right now. Because otherwise, why would the market be doing this in the first place? Let me just drop a zero line on here real quick. All right. So looking at the 30 minus 5 year yields, it went negative all the way back in 2022, just like the 10-year minus 5 year. And it looks just like the 10-year minus 5 year. Here we got the 30 minus 10 year. Let me drop a zero on this. Look like that was the support, so to speak, for this spread. So didn't really trade much below zero. But again, the idea is for you guys to see the structure and understand that we're entering a recession. Period. It's just a matter of when these buffoons decide to recognize it and acknowledge it and put it on their little calendars and stuff. But other than that, that's where we're at. This is okay. So the 20-year, it wasn't even issued for a long time. But when Biden came in, is when they started issuing them again. How about that? Funny, right? All right. Let's drop this joint here. Okay. What's causing the recession? Everything. You, your family, everybody that's an adult or working age, everybody that's essentially is okay with the system operating as it is. That's literally the cause. So the COVID shit has nothing to do with it. The COVID shit is a symptom, right? So how does an economy function? Economy functions as follows. People exist, and thereby default a demand for stuff exists. Now, the answer or the question then becomes, well, how do people facilitate trade to acquire the stuff that they need? Well, that's where money comes in. You see, money is the grease, money is the oil, money is the lubricant of the system. And if you want, you can think of money as the central nervous system of the economy. And the central nervous system has been sick since 2008. I mean, really, since 1913. But what we're witnessing now is the culmination of all the fuckery, all the printing, all the credit, everything. In 1983, the expansion of credit in every definition of the word became a thing in the West. And with that came the destruction of the Western economy. So, what you're witnessing now, 40 years on, is the end game, which is the destruction of the fiat currency. And that's always where it ends. And it's important to realize that the dollar became straight paper on August 7th, 1971. And typically, fiat based currencies, meaning paper money, typically doesn't last more than 50 years. So the US has had 3 extra years than the average. So what we're witnessing now, you know, let's look at let's look at the the very thing that I made the daggone thumbnail, because this is the point of all of this stuff that I've been talking about for 4 years, and why crypto is at the center of everything. And strictly why, if you're listening to somebody on YouTube, on TV, whatever, wherever, if they're not telling you the next trade is real crypto, then they don't know what the fuck they're talking about. Period. Because of course gold, silver, duh. But guess what? Nobody's fucking walking around with a goddamn kilo of brick of silver or gold in their goddamn person. Like, it's just not happening. It's just not. Nobody's trading grams. Nobody's dealing in grams. And sure, some people might be okay taking that as payment. But what I'm saying is it's not going to be a main method of payment. Unless something crazy happens, it's just not going to happen. Because we have the digital world now. We have this frictionless way of transacting. So why would we go the way of the caveman? Doesn't make sense. It's just not how humans work. You know how long I've been waiting for fucking technology to fall on his face and for us to revert back to paper and fucking analog shit? I've been waiting since I was at least 15, 16, and it doesn't fucking happen. It doesn't fucking happen. No matter how invasive technology gets, no matter how ridiculous the technology makes us as a species, it doesn't stop us from succumbing to it further and further for whatever reason. But the point to understand here is the economy drives everything. And we don't control this economy. So because we don't control this economy, somebody else does. And that's the key. That's the catch 22. People think they live in a world where they control, where they have a control over something, with their vote, whatever. I mean, this is what my assumption is because that's how people act. Not caring about what happens to you, to me, tells me you don't give a fuck about your existence, or I don't even know what to think. So this is what I see from adults that just let other adults do whatever the fuck they want. Because we all adults. How the fuck were our parents thinking it made any kind of fucking sense for these buffoons to do the shit that they do? Because they didn't fucking know better. Right? They don't have no control. If they had any control, how the fuck the towers get knocked down? You see, and it's shit like that that people don't fucking stop and think about. Because if you're an adult and you know how shit works, you know goddamn well that shit was a setup because nobody is flying over New York City. Over it, into it, near it. No, no, that doesn't happen. Period. Nothing enters this airspace without some fucking jet being here in 2.5 seconds. And I was 16 and I knew that. So how in the fuck did we get here 24 years later, 23 years later? Because people don't give a fuck. That's why. So it's everybody's fault at the end of the day. I've been talking about this shit since I was fucking 16. Nobody's trying to hear me. Everybody wants to believe the shit that's on TV, no matter all of the hard evidence that's thrown in their face. Because nobody wants to be the guy or girl that says that they were fooled. And sad fact is that's human nature. And because that is human nature, and those in control, or at least with the illusion of it, know it, they're able to maintain that illusion going. But now we're entering an interesting point in time because you have to think about what's happened over the past 4 years. You know, over the past 4 years, the current U.S. administration has focused on, for example, depleting and by our I see the American oil reserve. Right, I've done a whole stream on this and all that, so look for it. But point is, if an emergency catastrophe or anything was to happen, the U.S. is fucked. Period. If you think gas prices are high now, psh, let's hope nothing crazy actually fucking happens. Because it's not gonna matter what's on this chart here, right? And this is barrel of crude oil, West Texas Intermediate. This is what's pumped out of the ground in the U.S. Now, when we go to heating oil, This is essentially the diesel oil that people use in the US to heat their homes and stuff, or whatever, apartment buildings, whatever it may be. That's the price, $2.12. The gasoline futures market today is officially under $2. That's a level that deserves fucking being denoted for sure. Get rid of this magnet shit. Because $2 a gallon is huge for us human beings that gotta drive. Um, to what the fuck? Alrighty. Heating oil too, actually. But I guess that line for crude is 50. I mean, it's really 65. Yeah. So we're probably gonna hit if the trend. Okay, so let me get back on my frame of thought. I got sidetracked here. Um, all right. So back to my train of thought. We got gasoline at under $2 per gallon officially. Officially. All right. Officially. Now, when you go outside, depending on where you live, a map, U.S. map of gas prices. Everywhere. Let's see. Alrighty. Exactly what I was looking for. All right. So here we have a whole map of the U.S. And we have a little legend on the bottom right. Okay. So we can see the cheapest gas is in Oklahoma, Deep South, Mississippi, Alabama, right? Tennessee. And that is apparently $2, over 2.5 bucks. So I don't know where they're getting these $2.38 from. 255, all right. 258. So it makes sense that Texas has the cheapest gas. Oklahoma, this is where most of the drilling is happening. Louisiana, right? 259. This is where most of the drilling is happening. So I still don't see this 238 though, and that's really irking me. Let's see if we can find some 238. 257. I don't think we're gonna find this 238. 258. 259. Yeah, I don't think we're gonna find this. I think that's just the scale. Maybe here. Oh, boom. 230. Cheapest gas in America. Seven. This is the area code. Let's see where this is. Sour Lake, Texas. So that tells you what kind of water they got out there. Don't think it's a place I'd wanna live. But I just want to highlight that you're gonna find the cheapest gas where it is drilled, right? So it makes sense that this is where the cheapest gas is. Now, the most expensive gas for some reason is California. Seattle makes sense, but California, I don't really get when it's like right here. But New York has cheaper gas than California, and it's all the way the hell out here. So, what's the difference? Taxes. Taxes. That's the biggest difference when you're looking at prices from this perspective. When you're looking at prices from the perspective of, okay, the market is telling me we are $2. We're officially under $2 a gallon. But when I look outside, what am I seeing still? If you live in any metropolitan area, you're seeing at least, let's see here, at least $3. And I'm gonna go on ahead and say at least $3.30. Right, let's see what's going on in Miami. $3.20, Miami-Dade. San Antonio, 275. Galveston, 284. 284? Damn. No, I don't want Harris. Houston. Am I doing something wrong? $3 for Houston, basically. All right. So that's Houston, San Antonio, Fort Worth, Dallas area. Let's see what's going on over here. Over $3. So when you look at major metropolitan areas, the gas is going to be 75 cents or more higher than the wholesale market. All right. So you have to ask yourself, besides taxes, what's causing these price increases? When I go outside, I know it's 350 and up around here. 350 is cheap. If you see 330 something, haul ass. But why? Where is that $1.50 coming from? Where is it going to? Right? Because they're definitely not doing anything with any of that money. Nothing. And this is this is what the economy is ultimately, right? Multiply it by the entire world, right? The entire world is literally, and here we go. End of the day, after the close, and we'll get back to it as far as the index goes. And this thing is just going. I mean, anybody that was holding a options trade into the close of the day, I mean, God bless you, because you crushed it. Today was one of those days where you just got to crush it. Um, so back to the economy. It's just one of those things where you have this scenario coming together that doesn't make sense. You have a currency that is seemingly collapsing on itself in terms of intrinsic value. And what I mean by that is that its natural value is non-existent, right? And how do we know that? Well, let's go to St. Louis Fed. I have literally a set of charts that shows exactly how it's not. Let me log in and all of that, and then I'll put it back on this side. But let me log in over here, and then I'll show you guys a chart. It's just it's just simple math, and that's the thing. If you're not, and the thing is that's just step one. It's simple math is step one. If you're not even looking or thinking about these problems, these things that are going on, you're never going to figure it out that it's just math. Because who's thinking about this shit? Very few people actually are thinking about this shit. And that's the issue. Like and how do they do it? They do it by making the topic boring, uninteresting to people and whatnot. But guess what? This shit, without this here, it don't matter what you like. You can be a fucking photographer your entire life. If you don't understand this economy, your punk ass ain't fucking snapping no pictures for money. And that's how it goes. So what we're looking at on this chart is GDP in red in dollar terms. Oh, I'm sorry. These are both indexed. So I've saved these to be both indexed so that they're apples to apples comparison. So GDP is 28,000 versus is 1930. So I'm starting both of the indices at 100 and 1930. So from 1930 to now, the GDP has gone up 2,800, or excuse me, 28,000 times since inception, which is fine. But look at the federal net outlays. What is a federal net outlay? Take a wild guess. Government spending. And just so it can just not be what I think, you guys need to hear what the data is. Let's see if we get an actual definition here. Nope. What is it? Just not gonna give me the damn definition now? Not doing that no more? What's going on? It's literally not putting the damn definition. What's up with that? I guess it should be so obvious that you shouldn't have to fucking look it up. Let's see. Federal Reserve, federal net outlays. What is what is federal net outlay? Oof, we making new lows, aren't we? Sure are. Time to log on for one. Let's see. All right. So here we go. What's the difference between budget authority, obligations, and outlays? Budget authority, obligations, and outlays are related terms that describe the funds provided, committed, and used for a program or activity. And this is directly from the Congressional Budget Office. So there you go. In general, outlays occur when a federal agency issues checks, disburses cash, or makes electronic transfers to liquidate or settle an obligation. Directly from the horse's mouth. Now we can move on. Um, oh no, where's my chart? Alrighty. What in the Frankfurter is this? This is not what I wanted. Alright. 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 Let me find this damn chart, man. What? Wrong one. Alright. Alright. So back to the topic at hand. So we have GDP for 2023 reaching 28,000x, 27,000x over its inception value. But if you look at federal net outlays, it is 180,000x. It's greater than what it was since inception. So somehow the economy has only produced 27,000 times whatever the GDP was in 1930, but the government has found a way to spend 7 times that, 6 times that, and nobody cares. Nobody bats an eye. Nobody has a concern. And again, it all started after the 70s, 1971 to be specific. And by that time, we were already 6,000 and 1,000 X above net outlays and GDP respectively by that point in time. Let me do something to these graphs here. Let me make them log. Yeah. So, what am I trying to show you here? Well, what I'm trying to show you here is if you look at the left side, you'll notice the 2000, this horizontal line going up until 1971 is pretty much where things were kept under that 2000 barrier. And whatever it is, respectively, for the blue line, right? They both pretty much tracked one in front of the other. But it's important to remember that we're talking about outlays, federal net outlays. We're talking about debt, right? So let me collapse this to the same period of time so that we get a similar view. Because we want to make an apples to apples comparison. We already have it mathematically. We want it to be the same graphically. So we're not confused. All right. So if you look at this chart, it's almost like they took whatever GDP existed up to this point and just started spending it. Because ever since, GDP has been trailing spending, pretty much. And when you look at 1990, 1993, these points in time, you know, does this cross mean anything? I mean, no, because here's 2020 where we went back under for after going over, right? So the idea to grasp from here is that this is a never ending problem. And it's going to be never ending because people aren't aware. At this point, they aren't aware. They're not educated enough. They don't really know where to start, especially a place like the US where people are literally dumb as fuck. Like they think that, well, people in the US are taught to believe that specializing in something, i.e., only knowing one thing, is the way to go. And turns out it's not. It's the complete opposite. So if you subscribe to that notion of specialization where you only know one thing really well, man, you're gonna get blindsided by the rest of the universe. Literally, the rest of the universe. So good luck with that. All right. So right now we're staring at a chart of GDP versus the value of the US dollar over time. Now, what I'm going to do is I'm going to go on ahead and make the scales log again for dramatic effect. And let's see what we get. I don't actually know what it's going to look like. Huh. Exactly what I thought, though. So it's similar to the other chart we were just looking at, but it's the inverse. And it's the inverse in that we're looking at when the drop started going crazy to zero. That's ultimately what we're looking for. And staring at this chart, we can see that after 1971, the right side, the index over here from 300 to zero, right? So before that, it was from the top was 800. So we're talking about it went from 8 to 3 in 50 years' time, and then went from 300 to zero, which is where we're at now. This is the value of the US currency. And the index value is in 1984 out of 100. What's the value right now? Let's see if we can get this thing to give us a number. Doesn't seem like it will. Um, Let me zoom this in a little bit. Maybe it'll give us a number. Nope. But on the basis of 100, it's apparently down at 32 and a half. So if we're looking at it from a dollar in 1984 is now apparently worth 32 and a half cents. So the dollar from 1984 to now has lost 67.5% of its value. And that's just if you've been alive from 1984 to now. If you're considering the valuation that it had in 1930 at 800, right? Because that was the peak. Let's go all the way back to 1930. Right, you look at this. This is pretty much the top. Let's see if we can go back a little bit further. This was right after the crash, 1929. Here's 1930, right? So that's when they started tracking the recession. So as you guys can see, that was the highest point of value for the dollar because there was none, literally. And that's the issue. People don't understand math like simple ratios. Like that's really the honest problem. And this is why we now have a currency that's worth 32 and a half cents versus a dollar of what it was once worth. And keep in mind, let's take note of the fact that it was once worth 760% more than it was in 1984 at 1932. So in 1984, the dollar was worth a dollar. That's how I'm measuring this. So if we go back to 1932, the dollar was actually worth $7.60 in 1984 money. So this is how bad the valuation issue is. And the sad fact of the matter is that people in America are just not in tune with that. They don't know. They don't understand that that's the issue as far as the money and why things are what they are and interest rates being where they are. All of this stuff, it just matters. And unfortunately, people do not know. Um, I'm just changing the structure of this chart. And yeah, I'm going to go with their little recession thingy here. And I'm going to change the other one as well. Index. Select the recession. We're going to go 29. All right. Now, so what did I just do? I just made 1929 the starting point in terms of value for both the US dollar and GDP. So I'm going to go to that point in time and we're going to see what the values are. All right. So, excuse me. GDP was 115. Oh, I'm sorry, it was 100. Currency, 100. All right, so that's a starting point for both. The GDP, or I'm sorry, the dollar scale is on the right. So the 100 you're seeing is right here for the dollar, and the GDP scale, this is the 100 you're seeing. That's why it's up here. So what we're gonna do now is we're gonna go back to max, And we're going to see how things have either improved or degraded from that point in time, the starting point, 1929. Man, the market is still losing it. Ugh. Yeah, we're going there next. Don't worry, guys. New lows after the close. Mm-mm-mm. All right. Currency, US dollar, is worth 5.6 cents, according to the math that they're doing based on the data that they have from 1929 to now. So if you had a dollar in 1929, it is worth like $1,000 a day. Or $100 a day, excuse me, is worth like $100 a day. A dollar from 1929 is worth about $100 a day. That's what this is saying. About $95. Because that is how weak, that's how trash the currency is because of all the things they've done to not take care of the economy. Now let's look at how debased GDP is. Remember, we started with 100 for GDP as well. But right now, the GDP reading we're getting is 1880. Oh boy. Breaking news. Social Security is down. Online and in-person services, somehow. That means if you're going to their buildings, hit by nationwide outage. Isn't that funny? We've talked about how this was coming. So, not going to beat a dead horse. Back to this. So, GDP went up 1,800 times somehow. But in the same vein, the dollar has dropped 95%. So the GDP, which is measured in dollars, really go up 18,000 times or 1,800 times? Probably not. But in the way that they determine that it went up or down, it looks like it did. And that's the scam that they perpetrate on people. And again, if you're not thinking about this stuff or anything like that, how are you going to catch it? You're just going to be like, man, things are getting expensive, and you might or might not understand how or why. And that's the little story that they pull on people. They get you to think that it's somebody else's fault, like a business, for example. When a business has costs, a business has rent to pay, it has this to do, it has that to do. It's not easy peasy. Oh, let's just charge these guys what we want to charge them. And don't get me wrong, of course, certain businesses do that, but that's not what we're talking about. We're talking about run of the mill, regular run of the course business. Uh, there's going to be inputs. You're going to have to pay employees. You're going to have to pay rent. And in today's world, you got to pay a bunch of regulatory crap to your local, state, and federal government agencies. So running a business, depending on the type of business and the type of industry, is just not cut and dry like it used to be. You know, I've heard in certain instances that even for kids, running a damn lemonade stand is a problem nowadays. I can't imagine that. I wish somebody would tell my kid they can't. I'd hit them with the Constitution so fast they wouldn't know what the hell hit them. Like, get out of here with that. All right, so into the close, we're seeing that the market is selling off in a big way. And interesting to note that as the market traded into the close right here, this is the close right here, 4 p.m. Bam, right here between these two candles. Bam, bam. It's important to note that the market chopped around pretty much after the European close from, I guess this is the second level. Yeah, below the second level. So in this type of trade environment, after the day's been or the session has basically been one way, you got to be careful to not get caught trying to catch the market going the other way. You have to find a way to determine when it's a trend day, and the best way to do it, at least in my opinion, is by using relative volume intraday. And the way this indicator works is typically when the market is showing you a reading of greater than one, it's a major trend day. And of course, the higher, the more major. And what do we have here? We have 118 reading going into the end of the day, and we even went as high as 1.5 throughout the day. Right before the open, interesting, right before the market peaked, we had a 1 point, almost a 1.5 reading. And again, the measure to give us a nod in the direction of whether we got a trend day or not, it's just one. So anything above one, and especially if it's consistent like this, that's what it means. It means it's a trend day. So that's how I try to figure it out. Besides the moving averages, because the moving averages don't necessarily mean it's a trend day. It just means prices are below that average. The market could just move freaking 100 points or 150 and not do a 500-point move like it did today. Well, almost at 600 right now, from the settle of 963, yesterday's settlement. Let's see how many points we got so far. We went all the way to 972 and a quarter. And we're all the way down 35850. 613 handles. 613 points. All in one day. And it's not even done. Still going. Because we got 10 minutes until day traders have to exit. Day traders have to exit at 5 to 6 minutes before the market closes electronically in order to not get auto liquidated and have to pay a little fee to the broker. That's common amongst most brokers that I know of, anyway. So when you look at the market from a big picture perspective, well, what do you see? What you see is it looks like we're just rolling over. And nobody's really talking about that. Everybody's expecting the bull trend to continue, but it looks like we're entering a consistently profitable downtrend, if you understand that. And of course, we're going to watch for that moving average, the long term moving average, specifically 17,923, that area, which is only 400 points away. I mean, after traveling 600 points in a day, 400 points doesn't seem that far. But looking at this area here, zoom in a little bit, cut time down. This should have been a support area. And it looks like the market is really picking up the same thing. So we're entering a pretty important zone between 18,000 and 18,350. Let's zoom in a little bit more. Yeah, it looks like it's going to take it out. But we'll see. 18,325 to 18,000. So 18,000 is going to be a pretty important area. So let's see here. get rid of these lines here real quick. So price is currently below this area of support. This right here, this level, 18,430. You think from 18,440 to 18,420, that's an area of support, and we've lost that area. We're all the way below at 370, 18,370. So that would lead me to assume the market's prepping for a move to 18,100 or 18,000 area. If it holds this 18,250 level, well then all right, maybe it's gonna bide its support with price action, but that typically does not happen. So let's zoom out a little bit and let's see what's down there at 18,000. Okay, derivative level, and previous breakout point settlement value of 17,966 spot 50. So that's the potential magnet area, but let me see something. Alrighty. Let's see here. And I'm just trying to identify potential areas of support and resistance. We have either a value area high or low. Can't tell which. Looks like those are highs. Nope, those are lows. Okay. We got value area lows at 18,270 and 18,230. Okay. So 18,250 after all. How about that? That's going to be the area to watch, apparently. So we'll keep an eye on that. And then the level below that at 18,000 is going to be 17,975 through 18,025, a 50-point range. That's what makes sense to watch as the market continues to get smoked by US dollar accumulation, because that's ultimately what it is. We had a nice run up and a slow sell off that's recently accelerated after August 5th. September 5th was yesterday. People have been talking about August 5th this whole time, not paying attention to what's actually going on. And that's kind of why it's important to take a step back sometimes and look at what's going on, and don't get lost in the minutia, because there's always lots of minutia in the market. And again, guys, if you're gonna dabble in markets, you got to find a way to frame it, give it some type of something. I don't know, because until I did that, I really couldn't even make sense of the market, really. So that's really, really crucial. All right, we're gonna wrap this up here shortly, and check out what Hex is doing. Hopefully, the site resolves. So we're gonna get something. Yeah. Nice, amazing. People are so special, Ed. I mean, it's like I told you guys before. This crypto thing is so simple because it's a you thing. It doesn't matter what everybody else is doing. It doesn't matter what MasterCard is doing. It doesn't matter what Visa is doing. It doesn't matter what PayPal is doing. It doesn't matter what laws or regulations are passed or whatever nonsense these buffoons want to throw at you. Like, it just doesn't matter. And this is what cryptocurrency is about. So imagine being the person that's getting rid of that gold at these prices. I, for the life of me, cannot understand what people are thinking. But hey, let's hope we get a move all the way to half, all the way to three zeros and a five. Let's cross our fingers and hope for that, because you know what? People are dumb enough to do it. People are dumb enough to do it, and they don't understand how math works. And again, excuse me. Here's the most important thing to grasp about this crypto theory, because it's all theory until it materializes. Bitcoin and Ethereum are no longer Bitcoin and Ethereum. What does that leave the market with? You tell me. A bunch of ETH copies? Literally, that's what the market is. A bunch of freaking ETH copies. So, is there a crypto market? Honestly, how many independent chains, independent protocols, independent use cases that actually make sense exist? How many? And not some drummed up bullshit that you got to connect fucking dots to make sense of. I mean, some real technologically driven cryptocurrency. When I ask that question, people got to shut up because they don't have an answer, because they don't understand these things happen in stages. There's not going to be a new one every fucking week. There's not going to be a new one every month. There's not even going to be a new one every year. There's going to be a new one every 5 to 10 years. Bitcoin came out in 2009. ETH came out in 2014, really 2015. Hex came out 2020. So maybe now you can start looking into next year as to maybe there'll be some new tech that'll be better than Hex, but I don't know what's better than monetizing time. And we already got Pulse Chain and Pulse X to back that up. So I just can't fathom anything that's superior. Just because some of your homies on YouTube said there is something more superior doesn't mean they're right. That's important to understand also. So, you know, I love it personally. I know a lot of people do not and are not fans of what is happening to Hex right now, and I feel for you. But that's why we was talking about 5555 the whole time. We wasn't talking about nothing else, because the pros already seen this. We already been through it. It's called Bitcoin and Ethereum. It's called the same thing happens both every time something launches that people don't understand. They buy it up, then sell it when it doesn't do everything they thought it was gonna do in the minute that they had it. Literally, that's what happened to Bitcoin, Ethereum. I mean, that was the whole thesis if you've seen my first few streams. So here we are. Is it gonna get better? Oh man, I sure do hope people keep selling it. I sure do hope so, because that is how the long-term investors win, because it's about winning. It's not about making friends and shit like that. Like, that's cool. People are cool. But at the end of the day, market's still making new lows. And are you participating in that greenery? Odds are you're not. Odds are you're hoping some random crypto fucking saves you. And the thing about it is if it's not crypto season, it's not going to happen. And right now, as detailed a long time ago, it's not going to be crypto season for a while, because they've misguided everybody into thinking that crypto is a whole bunch of fake exchanges and shit. So if you're that person that's on these fake exchanges dealing in fake crypto that only passes from fake exchange to fake exchange. Well, good luck with that. So when you look at Pulse Chain Hex, apparently it's two zeros and a three versus two zeros and a one on eHex. So not cheap, but we like all the same. Ink, buck 38, buck 39, depending on what you're crossing it with, PLS and PLSX, respectively. PLSX at 4 zeros, 1.5. Is that right? Yeah. So that's what? Half, half of point 0.5 above SAC. Yeah. And PLS, can't remember how to ever find PLS. I think I found it last time. I think I had to type it out. Is that what I had to do? Alright. USDC. Man, why is it not? I haven't been able to find PLS in a long time, and I don't know if it's because I got retarded all of a sudden or what. Ah, here we go. Weird. I'm not sure why I wasn't able to find it all this time. Actually, yeah, you know what? I'll take a look at Bitcoin just for comparison's sake. Am I looking at the right thing? Guess so. Let's see. Okay. Yeah, looks like we do have the right thing here. Let's get a weekly view on this bad boy. Man, I hope. Oh boy. Look, guys, I wouldn't. I don't know what's going on, but it looks like this thing is not going lower here. So get your PLS. Get your PLS in if you want it, because it's not looking like it's gonna really find that floor anytime soon. So yeah, it's looking mighty strong. Um, Fortunately, these things isn't working. This thing just sucks. This charting platform is one of the main reasons I don't really look at these charts anymore. But you should just be buying all the time. I mean, that's the safest way to not get screwed over. Because crypto don't give a fuck. So there you have it, guys. Those are all the winners right there. Oh man, look at that. We almost ran into level 3. Very nice, very nice. So let's see, 339. Yep. So that's about 20 handles away from hitting the top side of this one. 339. No, 8 handles away from hitting the top side. Not bad. Not bad at all. So yeah, that's all I got for you guys. If you guys got any questions, yeah, PLS die. Yeah, whatever. It's all the same. Um, Not sure if they removed. Let's see. If you guys have any questions or anything, let me know. Let's see. Oh, why does it do that? Okay, now I just want to fuck with me. Okay, I guess that's not it either. Um, Actually, let's see if we can get some type of inverted view. Ah, here we go. Man, why is that thing hitting like that? Oh, this ain't it. We'll see. Oh, hope that's it. Looks like this is it. Well, if this is the right chart and the other one isn't, well, that's even better. What is this? One, two, three, four zeros and a three. Four zeros and a three. Let them keep selling. Let them keep selling. Because, you really got to realize how markets work. I don't know how often I say that, but damn, that's probably the most important thing you'll ever hear me say, because it's the truest thing you got to do. If you don't understand what people are doing when they're selling, then you're screwed. Period. Like, there's no two ways about it. All right, I think I found it. There's literally no two ways about it. You got to understand what is happening when people are saying sell and buy. You have to. Because if you don't, you're going to learn the hard way like I did. Because you missed Bitcoin and ETH. And then you're going to miss this. I'm telling you guys. You're going to see it. You're going to see it. Because again, yeah, this is it. It even got my little indicators and lines and shit on it. All right. So we finally found this damn thing. Amazing. Oh, yeah. Yeah. Yes. 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 This is amazing. This is what we want to see. Literally. So shout out to the sellers. Yeah, I keep selling. And yeah, this is what us long-term investors want to see, because high prices equals pain. You understand? Whereas low prices does not. Now, this is what's considered a weak low, because the value area low is right with pretty much the low print of the day. And when that happens, that typically means that the market is going to continue lower. But looking at how this market is shaking out right now, um, area resistance is right immediately above 18,500, uh, 18,600. So market is looking very weak. The dollar is looking testy. It's looking like it's gearing up for a move. Looking at this indicator, um, but we'll see. As you guys have noticed, crypto is really not macro, and that's really important to understand, because the things I talk about do not necessarily correlate to what is happening in the crypto market. What was interesting is, as I look at this chart, it reminds me of the what do you call it? The interest rates. It's what it reminds me of, because it's sitting right on the support area. So, okay, well, hold on before I log off, because this is annoying. Um, yeah. At some point, Bitcoin and interest rates became correlated. And I'm guessing it has to do with the fact that we're now entering a macro world. And what I mean by that is that all these different currencies are going to have their own standing with respect to whatever matters to that respective currency. And it seems that at some point along the way, Bitcoin was counting on higher rates to make it relevant. Not necessarily sure what else to make of that at this point, but that's what I'm getting from this chart. Because right now, interest rates are rolling over, signifying an impending recession on top of everything else that we are looking at. And Bitcoin is not looking too hot. And this is a daily chart. So not sure what the crypto bulls are gonna make of this reality here, but they're about to get a swift kick in the balls potentially. Let's see what's going on with ETH. Wasn't ETH just like $4,000 the other day? Like what happened to that? Must have been pre-summer. Yep. Must have been Vitalik making some tops over here. Oh man. Yeah, so anyways, it's kind of like what I told you guys a year or two ago, whenever it was. They weren't they co-opted these coins. They're not crypto, and this is proof of that. Because now what's happening? They're following the risk off trade. So long story short, interest rates going down are apparently not good for these cryptocurrencies. And I'm thinking it has something to do with tokenization, but we'll see how this continues to play out. And at one point, I'll probably break down what these guys are trying to do. But yeah, that's all I got, guys. Thank you for tuning in today. Appreciate your patience. And, keep it tight, man. Even cotton's getting smoked today. Look at this. Look at that. Still is entering my zone now. But man, market is getting crushed, and the dollar is doing some damage. So we'll see what happens here with the rest of this and how it shapes up. All right, you guys have a good one. Might do a stream Sunday, not sure yet. I'll keep you guys posted. Peace.